It is time for another warning to all Tesla stock investors. I am a Tesla stock investor. 100% of my stock portfolio is in Tesla stock. And this is an interesting time. Many Tesla stock investors are worried. You look at the price targets and they are all going down. In fact, this is just the first batch. There's quite a few more. The silver lining in these price targets is that most of them are still above where Tesla stock currently is. But if you look at some of the top analysts, for example, William is the second highest Wall Street ranking analyst that also analyzes Tesla stock. He just downgraded Tesla stock from a buy to a hold, and the price target is now only $154 for the next 12 months. And if you look at the earnings, you see that the projected earnings are also going down very fast. That is why the price targets are falling. If you are a short-term Tesla stock investor, it will boggle my mind if you said that, yeah, I'm just investing into Tesla stock for the short term, maybe for a few months, maybe for up to a year. It will boggle my mind if you tell me that you have not sold Tesla stock earlier. Back in August, on August 15th, I made this video where I said most likely actually it will drop further. I was speaking about Tesla stock. And in the video, I was actually talking about a moment then Tesla stock was closer to $200, but in the few months before August, Tesla stock actually went up. And I stuck with my opinion that Tesla stock more likely will drop further in the short term. But the reason why I do not trade is because trading generally is a losing strategy long term. If you want to just preserve your wealth, maybe it's not a bad idea to trade here and there. But if you are trying to build wealth and if you are trying to grow your wealth as fast as possible, usually that is not the best strategy. And times like this really show you which investors are actually long-term investors that understand the fundamentals of the business, that do attach a reasonable valuation to Tesla's full self-driving business. It shows you which investors actually understand that Tesla will lower the costs as well eventually long term. And this, combined with relentless price cuts, only helps Tesla to capture market share, which prevents the competition from entering. All of these things you will absolutely hate to do short term because it wipes out the earnings temporarily. But in the long term, Tesla is positioning itself as a mass market brand. Some investors are very upset with the price cuts because they want Tesla to appeal to the luxury market. But how many vehicles does Mercedes sell per year? Audi? All of these luxury brands like BMW? Not that many. But you look at Toyota, Volkswagen, they sell about 10 million vehicles per year each. To become a mass market brand, you do have to lower the prices. And for us investors, if you are a long-term investor, and if you don't mind Tesla doing that, then you will be happy with a lower point of entry into the stock. I mean, wouldn't you be happy to have bought here? I mean, right now, maybe it looks scary to be buying at current levels because what if we go lower? And maybe we will. If Tesla cuts prices again, especially multiple times, I'm warning you, you will probably see some Tesla stock bulls flip and become negative and trash the stock. Don't get confused. These people were probably traders the whole time, posing as long-term investors. And there's nothing wrong with being a trader, by the way. If you can make money doing that, congratulations. I salute you. But that is extremely difficult to do, and probably if you keep doing that for the next 10 to 20 years, your returns are going to be below S&P 500. Dan Ives, who is a 4.9 star Wall Street analyst, actually has a pretty good take on this. He starts by explaining whether the lower margins are concerning.
Is it keeping you up at night, Dan? You mentioned in your notes that it might keep Tesla investors up at night. Is it something that you're concerned about? And I think what everyone wants to know, Dan, you're so bullish on this company, on the leadership from Elon Musk. We all want to know what would change your mind.
Yeah, look, I think it was a concern, no doubt. I mean, no rose-colored glasses that it came under 20%. Now, look, right now they're going on the aggressive, going after market share, and I think that's the smart strategic poker move. But I do believe the next few quarters are going to be pivotal in terms of trying to keep margins around here. If you have more price cuts and this just continues to go downward from a margin perspective, I think that would be a clear negative going forward. And that's why the stock's down here.
So then think of Amazon early on, where the strategy was dominate, 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 put up barriers to entry to others. Would that work here? Will we look back and think that this was a smart strategic move, or we will look back and think that this was silly, that you can't dominate this market?
Yeah, Mohammed, I think it's a great question. I think here they're essentially putting an iron fence around their install base. It's an EV arms race that's playing out across the board. And, it's hard to argue with Musk. I mean, essentially, Musk has been playing, he's been playing chess, others have been playing checkers. And I think what we're seeing here, it's the right strategic move for the long term, but in the near term, it's a rip the Band-Aid off moment. And this is going to be transitory, what we see with margins.
In other words, until now, when Tesla actually cut prices, the stock usually didn't do much of anything. It would go down maybe 5% up to 10% in a day, but then that same day, it would actually come all the way back almost fully. If that happens now, if Tesla cuts prices again, I will be surprised. Because the assumption until now was, okay, if Tesla is going to cut, we just still assume 20% margins, at least still. So if we are cutting, that means we are lowering the cost. But during the last earnings call, we found out, yeah, that did not turn out exactly as promised. So when a cut is going to happen now, Wall Street and many Tesla stock investors will not assume that Tesla necessarily has actually cut costs, although in the long term, I believe Tesla will keep cutting costs, of course, because Tesla is the leader. It has a clear advantage when it comes to costs, and Tesla is going at the fastest pace, so no one can really keep up with them. In the meantime, when needed, Tesla will keep cutting prices. But does that hurt the next generation vehicle? Does that hurt the Cybertruck? Does that hurt full self-driving? Does that hurt the energy storage business? I don't think so. And that's where the long-term play is. Wall Street is not going to give Tesla much credit for any of these things unless they see these things actually already being released, that they have not been released yet, but they will be relatively soon. It's far enough that a lot of short-term investors have no confidence in Tesla executing well on these, but for long-term investors, nothing much has changed. And a lot of short-term investors still have not really realized that Tesla is in this transitionary period where it's transitioning from a luxury brand to a mass market brand.
Let's just build on that a moment, Dan, and talk about multiples. What I want to buy when I have a name like this with a multiple like this one is a high growth, high margin business, not an EV arms race. Dan, does that not resonate with you at all?
This is exactly what most investors are thinking right now. I do not want to be in this arm race, even though it's pretty obvious that Tesla is going to be winning, because it is already clearly winning and it is still innovating and reducing costs. Why would you expect Tesla not to win this arm race? This presents a buying opportunity for us long-term investors. I'm just buying regularly every single month.
Oh, look, it definitely does in the near term. I think if we sit here a year and a half, 2 years from now, and this continues to be the narrative, then no doubt. I mean, this will be a major problem from a multiple and from where the stock is. But I do believe that this is sort of a pivotal time, given the macro, to really go on the offensive, cut prices, and make sure in this sort of arms race that they put that what I'll call an iron fence around the install base, because it is an important moment. It's almost a moment of truth for Tesla, and investors really are going to now have to navigate what margins look like the next 1, 2, 3 quarters.
It's a little bit like what's going on with SpaceX right now, where Elon Musk and the SpaceX team launched this absolutely gigantic rocket, and just the fact that it did not blow up on the launch pad is such an incredible achievement. And yet here's how the media is portraying it. The SpaceX Starship explosion shows just how far Elon Musk is from his goal of sending people to the moon. This is how short-term investors also see Tesla. The lower margins of Q1 show us just how it is impossible for Tesla to keep selling many more vehicles, because obviously it is never going to launch the next generation vehicle. Cybertruck is all a sham. Tesla is going to fail. FSD has not improved at all in the last 5 years, because Elon has promised that it would be sold every single year, and then it wasn't. And because of that, obviously, it has made absolutely zero progress during that time. So therefore, Elon is a scam. Elon is bad. Sell your Tesla stock. And short-term investors like that, I believe, are going to be severely punished, because they will not be able to take advantage of what is going to be once-in-a-lifetime opportunity being in Tesla stock long-term, because they are not comfortable with Tesla's strategy, just like the media portrays the SpaceX launch as a failure. Take a look at this, and you tell me that these people were not happy and not celebrating the obvious success that the launch was.
Obviously, this is does not appear to be a nominal situation.
Yeah, it does appear to be spinning, but I do want to remind everyone that everything after clearing the tower was icing on the cake. As you saw, as we promised, an exciting end to the Starship inaugural integrated test flight.
Everyone here absolutely pumped.
Let's not forget that the Tesla Model Y was the best-selling vehicle in Europe in Q1. That is a big achievement, and Tesla is executing pretty well given the circumstances, and I believe that execution in the long term is going to continue, although in the short term we are certainly going to have some huge bumps here and there, and these will present themselves as buying opportunities. My name is Matt Posius. Like and subscribe if you haven't yet, and this is an important message to all Tesla stock investors. Thank you so much for watching.